G'day folks, welcome back to another update. We're looking at the world stock market indices. Now, they're all consolidating basically, pretty much since our last video. We're going to include some back testing. Also, in terms of giving you a secret, you got a pen and paper handy? Write this down. Now, there is no secret in trading and there is no fast track in terms of doing anything in life. Trading is like learning a language. You can't sit down for 5 minutes, watch a video and understand it and be profitable. You've got to understand the concept, and the reason I'm doing these videos and a lot of these videos and using repetitive language is for you to understand the concept and then go away and trade and be profitable. So again, it's all about repetition, but also understanding the concepts and doing a deeper dive. And by watching my videos frequently, I expect you then to go away and be profitable and do it on your own. And now I do cover various strategies, so there's not just one strategy that you need to follow. There's various strategies, although there is an overriding strategy which I'll cover in a second. Now, before I go there, let's hit that like and subscribe button to support the channel. That'll be greatly appreciated. Before we go there, let's look at the market outlook. So as of today, July 29, the S&P 500, analysts expect total returns of around 8 to 10% by year-end 2025, supported by moderate earnings growth of 7 to 11%. Fed rate cuts and resilient consumer spending. Bearish perspectives warn of overvaluation and trade tariff risks, projecting a downside toward 5,500, which is a minus 12 to 13% if economic momentum falters. For the DAX, often seen as a potential top performer in Europe for 2025, with moderate upside reflecting renewed investor interest in mid-small caps and takeover momentum. Growth expected to moderate after a strong rally in prior years, with sentiment and geopolitical headwinds posing near-term volatility risk. For the Nikkei, Japan, fundamentals remain supportive. Strong corporate earnings revisions and improving macro data give the Nikkei further upside potential despite rising JGB yields. However, negative investor sentiment persists in the short term, weighing on performance even as underlying indicators turn positive. For the Nasdaq, continues to lead global markets amid strong AI-driven earnings, low inflation and anticipated Fed rate transitions, with tech stocks accelerating broader index strength. Elevated valuations multiples expose it to downside risk if earnings disappoint or rates remain sticky. For the ASX for Australian equities gained around 10% in the first half of 2025, but analysts expect only modest EPS growth around 0.5 to 1%, leading to a cautious outlook with limited room for further advances. Sector rotation from banks toward mining resource stocks may provide pockets of opportunity amid overall market lethargy. For China, Goldman Sachs forecasts a 13 to 15% gain in 2025 for China benchmarks, underpinned by EPS growth and moderate valuation expansion. Despite recent volatility and US export controls, technical indicators remain bullish and stimulus measures are seen offering support. So this is the Australian market, the ASX, and if you're a regular to my channel, you'll know that I cover the higher timeframes. We always look at the higher time frame to get an idea of where the markets are going. So on the monthly, we've got the price above these moving averages. And you can see there the CCI is also broken above the moving average. So if you're trading on the weekly, you take long trades based on the monthly. Remember, always trade in the direction of the higher time frame. So if you're trading on the weekly, you go in the direction of the monthly, the daily, go in the direction of the weekly, and so on. Now notice here we did have a bearish divergence, lower highs on the CCI versus higher highs on the price, and that broke down and hit our 23-38% target range. And that 23-38% range is measured by a Fibonacci from that high to that low, or to the recent low before that divergence started. You can see there it bounced right into that range with that wick of that candle for that month, and it bounced out of there. That's all you need to see really. Sometimes it just touches that 23% range, other times it falls right through it. Okay, so again, I'm repeating a lot of this for those that are regulars. It's also good reinforcement for you as well. Now on the weekly, we did have a couple of bearish divergence here. And the last one we had here was between those peaks, lower highs there versus higher highs there. And that broke down, and it hasn't broken down yet. That's actually still rising. And so long as that price keeps rising and the CCI keeps dropping, we're going to consider that a bearish divergence. But that's basically the 23-38% range I've identified there. Also, I didn't mention it, but back here I've got this red area on the monthly, but also this red area on the weekly. That's a fair value gap. Basically, that's unfilled orders. So I don't trade those. You can see there, these ones here were filled with the action of these candles. And we may see the price come back down towards that area. So I consider these more like a support resistance area, if you like. So we may see the price break. And a lot of the markets are showing a bearish move to the downside, possibly in the coming weeks or months. So just be aware of that. On the daily here, we've got another bearish divergence, lower highs versus higher highs on the price, hit this resistance, and I've got this divergence target down here, and notice here we had a couple of fair value gaps. It's broken through that first one initially, and now it's actually broken through most of that second one as well, with the price action on those candles. And down here we've got another one again, longer term, so that we might see the price break to the downside with some sort of correction happening in the near term possibly. Now we go to the 1 hour chart. So again, if you're trading on the 1 hour, you go in a direction of the daily. That's one of our main strategy rules, and doesn't really matter what strategy you're trading here, you always follow that general rule. Trade on the higher time frame direction. Now again, I've mentioned the daily's got a bearish divergence, so just be mindful of that, hitting this resistance. At the moment, the price is broken out of that moving average range on the price, but notice the CCI is making a bit of a move to the upside, but it's still below that moving average range. So again, I consider that a neutral position. So if you haven't already entered, I'd stand clear and not enter until you see a more decisive move above the CCI in this case, if it's going long, or wait for the price to break below to start going short. Here on the 1 hour time frame, what we look for is any micro moves. You can see here we had a bearish divergence, so we're trying to find any divergence that might be in play, and there's no divergence currently on the price on the 1 hour chart. So at the moment it's bullish on the 1 hour, but again, don't take long trades until you see the CCI break higher as well on the daily. So that's the general rule we follow. Now also notice here, if I zoom in, we had a couple of fair value gaps here that were filled by the action of these candles. Another one back here, and more recently, the new ones, we've got these fair value gaps here. So you can see there we might see a price break to the downside possibly to cover those unfilled orders in the near term. Now in terms of a back test, what we do is I've just put it back here to about the 22nd of April, going back to this point here when the price and the CCI broke above the moving averages on the daily. That's the direction we take on the 1 hour time frame. And here I've got the stop loss approach on the profitability, and this is the average down profitability. Now you'll notice a couple of things. Again, another main rule we look at is we go in a direction of the daily, as I said. And in this case, when the price on the daily breaks into that moving average range at that point, that's the last point of stop loss you would take if the price starts going against you. But notice on the 1 hour time period as well, we've had a lot of smaller bearish divergence. Okay, so at each of those little points, well, first of all, let's cover the daily. So back here, at the very latest, you should have got out of the trade at that point there on the hourly, because the daily was touching the moving, or broke into the moving average there on the CCI, and then got into long positions again, pretty much the day after, when the price and the CCI broke out of those moving average ranges. But notice here, if I zoom in for a moment, let me zoom into this recent one here. So you always follow also in this case, the hourly chart. So if you see a bearish divergence like in this case, and you see the price break below, if you're going long, you would have been going long during that little period. You close out your trade when the price breaks below the moving average range of this divergence, when it breaks below there. So you would have got out with that little gain there. Now at the moment, if you're going long, and I'm just waiting, I'm telling you to be careful and wait for that to break on the upside on the daily. Let's assuming you went long here, you would have gone long on that one. And the stop loss approach there is showing you an entry there. Again, I'm not telling you to run through the whole period. I'm just giving you examples of what these strategies are doing. When it breaks above the price in the CCI, you would have gone long. And currently the stop loss approach and the average down approach of showing profitable returns. And you would close that out with a 0.3% gain, or at the very least, when it touches that moving average range on the CCI moving averages. So for the China Xinhua market, on the monthly, we've got bullish momentum on the price, as well as a breakout above the moving average of the CCI. So taking long trades if you're trading on the weekly in this case. Notice back here we had a fair value gap that actually was filled by the wick of that candle there, and so on. All these other fair value gaps are being filled from subsequent candles. On the weekly, likewise bullish momentum on the CCI and bullish momentum on the price above the moving averages. And for those new to the channel, these moving averages are available in the description below in a video. So if you can reference that after this video, that'll be where you go for that information. So bullish momentum on the weekly, and there's no divergence that I can see at the moment on that one. On the daily, again, bullish momentum price, but notice the price, the CCI is broken into that moving average range. So wait for it to break to the higher side of that to start going long again, because that could actually keep falling possibly, so just be aware of that. And notice also we've got these fair value gaps all have been filled with subsequent candles, so we always pay attention to those of a potential price retrace to the up or downside of those. So at the moment, neutral positioning on the daily. Go to the 1 hour time frame, we look for any micro moves to support a potential upside on the daily there. You can see here the 1 hour time period is bullish on both the CCI and the price, and we've got these fair value gaps up here on the upside but also on the low side, so that's undecided really. In fact, no, this one's actually been filled by that candle there, so that's already been filled. So possibly you might see further upside here for the chinois, but again, don't go trading based on that. You trade in the direction of the moving averages, in the direction of the daily, but also on the hourly as well, and look for any divergence to exit the trade. Also notice on the hourly here, we've got a fair value gap, so we might see the price pull back to fill those orders before making any potential further upside. In terms of a back test, what I've done here, I've deliberately started at the stop loss approach and the average down approach going back to that period back there and about the 22nd of April, when both the price and the CCI are above the moving averages. Now the reason I've started it there, you'll notice, just to demonstrate how to trade, you'll notice here there's a drawdown on both the stop loss approach and the average down, and you want to avoid that. So you don't want to be holding any stocks when the price goes against you in that point. So first off, at the very latest, you should get out of that position there if you're going long during that area. And that area there was identified, say if you're going long during this period on the daily with the CCI and the price above the moving average, you stop trading when the CCI touches that moving average range at the very latest. All right, no matter what the hourly is doing, you get out of the trade there. Notice also the CCI gives you an early exit compared to the price moving averages. So you would have got out on that little candle there on the daily near the top there, and that you would have saved yourself further price declines in that range there. Now there's a bit of a false break there. No stress. You again just close that out with a small loss. Then avoid going long. Actually, you might have started going short during that period because the price and the CCI are below. Then started going long again. So that's how you avoid that drawdown using the daily. Now, even off the daily, if you're not following the daily strictly, which you should, also note and take notice of the bearish divergence we had back here, for example. So the price is still rising. The CCI was showing lower highs, and that's where you would have got out. Probably when that moving average range started to turn down around there somewhere would have been an ideal place to get out of it. Because again, some of these places, you'll notice there the moving average range is still trending up until such time it starts bending down. That's why you've got multiple moving averages as opposed to one single moving average, which doesn't give you a clear indication of the behavior. Again, going long during these spikes to the upside when the price and the CCI are moving higher. So again, I've just demonstrated there what it looks like and how to avoid that drawdown. So for the German DAX, again, very strong range, and the CCI has been hovering above that moving average. So very bullish on both the price and the CCI for the monthly. Do note we've got a lot of fair value gaps down here. These ones in there were filled with the wicks of those candles, even that one there and those ones, and this one still hasn't been filled yet. So just be aware of that. We've got a potential downside sometime, and that could take weeks possibly to play out. Again, so don't go placing short orders based on that. On the weekly, we've still got a bearish divergence. It's actually leveled off at that resistance up there at 24,640, but notice the CCI is still dropping. In fact, it's actually in a bearish momentum at the moment for the CCI. A bit of a bearish candle at the moment this week so far, so just be aware of that. We might see a bit of a pullback. We do have these fair value gaps that haven't been filled yet, so just be aware of those. Again, they're a long-term play, so again, we might see the price start pulling back in the near term. On the daily, again, it's got another bearish divergence here, lower highs on the CCI and the price, and the CCI is still dropping, but so is the price as well. It's broken below those moving averages, so a bearish momentum on the daily, so only taking short trades on the daily. So looking at the 1 hour chart, again, taking short trades only. At the moment, notice it's broken above on the moving averages on the price and the CCI, so don't go short until we see both of those break to the downside. Like it did back here, that's where you would have gone short during that period. And again, notice the break into that moving average range of the CCI. It gave you an exit right near the bottom there, so you would have saved a bit of a pullback and losing a few points in profitability had you followed that CCI exit. Also notice as well on the 1 hour chart here, we've got these fair value gaps. Are those identified in red or pink? And this one is being filled as we speak. In fact, it's all been filled so far. And now we've got to watch these ones up here. So we might see the price break to the upside in the near term to fill these gaps. These other ones here have already been filled, as you can see, with subsequent candle action. In terms of the back testing, going back here to around the 22nd of April as well, similar to where it broke above here on the daily, above the price and the CCI. And I'm going to left that in there deliberately to show you that drawdown. And that's where you would have got out. Now this is where it went sideways for a while on the CCI, so that was a bit of a tricky one to follow. But notice the price is still bullish up until that point there. Now here, you would have followed exiting when the CCI breaks into that moving average range and getting out of any trades, so maybe small losses or small profits at that point, but also follow these bearish divergence at each one of those points. And you can see there, if I zoom in for a moment, at the very latest, you should have got out one of those points there when it broke into that moving average range on the daily or on the hourly. Notice we started seeing this bearish divergence. You would have got out of the trade once you see the price and the CCI break to the downside. So you would have got out there without getting into that drawdown where the price went against you. So with the Japanese Nikkei on the monthly, it's still above the moving average range on the price. Notice the CCI is currently in that moving average range. So somewhat neutral positioning. If you're trading on the weekly, wait for that to break higher to be more confident. Again, and by that stage, you might see a break through that resistance up there at 42.080. And again, notice these fair value gaps that haven't been filled yet. So just be aware of those. Again, that's a long-term play. Who knows? If we get a market crash for whatever reason, for geopolitical reasons, that it may come back down to at those levels in the near term. Hopefully, not too dramatic for the world. On the weekly. Again, you're hitting this resistance, both the price and the CCI are bullish, so taking long trades if you're trading on the daily. But again, notice these fair value gaps down here in the nearer term. On the daily, the price is bullish, but notice the CCI is broken into that moving average range. So again, neutral positioning on the daily. Again, notice since our last video back there, we had this fair value gap identified, and currently it's filling it as we speak. It's filling it since the last video. So always pay attention to those fair value gaps. Going to the 1 hour time period, again at the moment avoid going long or short until we see the daily decide which way it's going to go. At the moment though, notice here, if you're going long, you would have at least closed it out when the daily hit that moving average range, or at the very latest you would have got out once you saw this bearish divergence, lower highs on the CCI versus higher highs on the price, and you would have got out somewhere there when it broke below the moving average range. Now, notice here we had in the last video identified these fair value gap, these massive range, and it's actually filling up most of that range as we speak. So again, just be mindful of that. Although notice the price and the CCI just breaking above their moving averages, so it might be long positions shortly. But again, I'd like to see that daily also break higher to be confirmed of a long positioning. Also note the other thing to be aware of, even though both the price and the CCI are breaking higher, I'd like to see the moving average range, and that's why I'm using multiple moving averages. I'd like to see them start curving up, like they were back here, for example. They started curving up on both the price and the CCI. Even though that's higher, those moving average ranges are still declining. So just be aware of that. That's still a weakening trajectory, if you like, to the downside. Going to the back test, going long, again going back to about the 22nd of April, which was back here on the daily when the price and the CCI broke above the moving averages. Now notice again, you ideally want to get in when the moving average band is curving up. Now in this case, you would have closed out at the very latest when that CCI touched the moving average band near that candle up there, and that would have saved you a few points waiting for the price to break into that moving average band. But also notice you've got these bearish divergence, and I just keep reiterating, always pay attention to bearish divergence. On the 1 hour or the smaller time frame. I'm using the 1 hour here as an example, and currently where we are at the moment, let me just refresh that. Again, notice you would have got out because of that bearish divergence at that point there, and avoid going long. Okay, the S&P 500 on the monthly first off, it's still rising well above the moving averages, and notice the CCI is just fresh breakout to the upside, so bullish momentum. But do note, we still have a bearish divergence on the CCI versus higher highs on the price. So even though the price is still rising, we still consider that a bearish divergence, so expect a pullback at some point. Also notice I've identified a fair value gap there. This divergence target was his previous divergence back here, and that's already been hit with the wick of that candle. But we've got another fair value gap down here. So again, if we're expecting to see a pretty strong pullback at some point in the near term, possibly. So, and all the markets are showing a very similar fair value gap range to the downside, possibly. On the weekly, again, bearish divergence, lower highs on the CCI versus higher highs on the price. And there's another fair value gap there, and there's another one back there as well, which hasn't been filled. These ones back here have been filled. But at the moment, bullish momentum, that's what we look at primarily, the price and the CCI above the moving averages. On the daily, this one's, now I had a resistance back here. I'm going to raise that to that point there, and also going to raise, when we start doing this, raise that trend line to that point. Now here, in fact, I'm going to delete that divergence on the daily because you can see there that CCI is higher, that peak is higher than that peak. So I'm going to delete that divergence that's been identified previously. So whenever you see that CCI not being in a bearish momentum anymore versus the price, then you invalidate it. In this case, it's been invalidated. But do note, we do have these fair value gaps down here which haven't been filled yet. So just be aware of those on the daily. On the 1 hour time period, there was a bearish divergence back here. And it looks like, now it depends where you draw these divergence targets on the 1 hour time period. If you draw it from that high to that low, you can see that was filled. So ideally you want to take it back to the previous low before that divergence started, which was that point there. Sometimes I do take it further back. In this case, you want to take it back to where the divergence started. So currently there's no divergence to warrant any concern. The daily is looking bullish at the moment, and so is the hourly, so taking long trades for where we are at the moment on the S&P 500. If you look at the back test, again going back to about the 22nd of, in this case the 24th of April, going long, you would have closed out each of these, and on the S&P here, you would have closed it out the very latest when the daily broke into that moving average range, near the high there on that price on that candle, and that would have saved you those few points of a decline. But again, always pay attention to any bearish divergence on the 1 hour during this period. And as I said, there's no divergence at the moment. In fact, you're probably a fresh entry to the upside currently on the S&P. And for the NASDAQ, lastly, we've got the monthly still above moving averages, but notice we've got a bearish divergence on the CCI, so just be mindful of that. The fair value gaps down here have been identified, another couple down here, so again a very long-term play to the downside possibly, so just be aware of those. On the weekly, still bullish, both the price and the CCI are still bullish, it's the first thing we look at. And again, fair value gaps to be aware of. So again, I treat those more like a resistance area or support area. And on the daily here, we did have this resistance here previously. I'm going to move that to that current position where it is at the moment. It looks like it's still rising, and it looks like let me just maximize that for a moment. Yeah, you can see there the CCI is broken higher just from where it was previously, so I'm going to invalidate. In fact, yeah, that's no longer a bearish divergence. It was, to that point, it was almost a double top. I'll leave that there. But this one here is no longer a bearish divergence. So there's no divergence currently, but again, notice the fair value gaps. That's been filled mostly. They've been filled with a candle action there, and that one's been filled. So there's no fair value gap to identify there in the near term, but notice back here we've got these ones which haven't been penetrated yet. So just be aware of those. We might see a pullback on those. On the 1 hour time period, again, looking for any divergence. If that price keeps rising on the 1 hour and breaks through that resistance and creates a new high, then we're going to consider that a bearish divergence. So I won't draw it yet, but I'm just showing you how to start identifying it. And you can see there it looks like it may possibly break through that resistance. In terms of the back test, again going back to around about the 24th of April, the stop loss approach, had you let it run right through, has generated about 580. The average down has generated about $11,500. Again, to avoid these drawdowns on both the stop loss and the average down, always follow the main rules. Follow the daily trend and get out when the CCI touches the moving average band if you're going long, but also watch for any divergence to the downside on the 1 hour time period. Remember, we cover various strategies in the +1 video, so reference those +1 videos, and some of those are attached in the description below for your reference. So hit that like and subscribe button, support the channel. Thanks for watching, and see you in our next video.